Where's the new ICAP in this world?
What contingency plans do you think Putin's got?
But if you're looking for a disaster scenario, that would be that. If you start getting into small metals, expect a hairy ride.
Welcome to this edition of Talking Markets, and I'm joined by my good friend David Buik. David, welcome to this edition. And now, this is interesting, Gerald Ashley, who's the business of risk, really. I mean, your pedigree goes back to the problems at Barings, but there's Barings there. There's the Bank for International Settlements. You're a writer, you're a broadcaster, but most of all...
An all-round good egg.
All-round good egg. But most of all, you do talk to people about risk, which is absolutely essential, isn't it? Whatever you think about it, you can't be too safe. But just before we hit that, let's do the run on commodities first of all. Oil first. How are you feeling? What's your feeling?
Well,
about that?
Michael, thank you for that stellar introduction. First of all, commodities are interesting. They're very in favour at the moment because it's the inflation trade. So we look at oil first of all, and I think the interesting thing about oil is how dull it is, given all the events in the world. Oil is still kind of bumbling along. People who like charts, and I have my doubts about charts, keeping looking for a breakout to the upside, but it doesn't seem to have quite got the oomph yet.
Do you think that might be down, Gerald, just to interrupt for a second, that maybe growth throughout the world isn't quite as grand as we think it is, apart from the United States?
You're dead right, David. You've got this kind of balance here between World War III and hugely constricted supply versus the fact that actually demand is not that dramatic. There's a political edge to this, there is with everything. The American administration do not want the oil price going up because it's the famous car driving season and all the rest of it. We've got the elections in November. Biden absolutely doesn't want to see $100 a barrel. No. They'd really love it under 80. So bear in mind, America's got all this back channel discussions with Saudi about a load of things, and that must be part of the mix, I think.
Can I just before you move on to gold, which you will in just a second, just finishing with oil, but supposing there is a Holocaust, a maelstrom in the Middle East.
Well, then you're in my territory here. This is the difference between risk and uncertainty. That's such a huge uncertainty you can't price it, and all bets would be off. Initially, think of a scenario, some horrendous scenario in the Middle East. Supplies would sort of, be hugely disrupted. A market would go through the roof, but of course, world demand would fall off a cliff because world economies. Everybody think, my God, what's going on? So, I think oil is a very difficult market to trade. And if you follow the professionals, they do not trade the spot price. They trade the spreads between the forward dates because it's a much easier way to make money. So, if you're an outsider to the oil market, it may be worth, if you feel sophisticated enough, to look at forward trading in oil against the spot, so-called spread trading, rather than just taking a punt on the Brent price.
Very quickly, what role or what contingency plans do you think Putin's got? I think and also, to chuck in just so the thing, OPEC, for me, not as powerful as it was.
No, it's a lesser share of the overall market. Mr. Putin's got a rather nice deal with China. He's selling loads of oil and getting hard currency or gold or whatever he's getting in, or more likely in return for armaments. Lots of armaments deals going on with China. So this is one of the problems, I think, with trying to restrict trade, so putting on embargoes and all the rest of it. The market always finds a way around it. It's a bit like water. If you don't have a completely watertight system, water finds a way. It's exactly the same in world trade, and there are plenty of people out there prepared to do sort of, dark market, black market type deals. And so
on top of the list, if I may say so, India.
Absolutely, and one often wonders what happens to oil from places like Venezuela. Yeah. We always forget Venezuela, largest producer of oil in the world. Yeah. Well, certainly in terms of reserves, they produce it all. Yeah.
Moving on to gold, well, we all know what's been like over the last 50 years. Flight to quality has always been an inflation instrument. It's expensive to get out of the ground. Now, of course, the central banks, I think, really dominate it. Your take, which is much more important.
I would say that's true, and it goes right the way back to ancient history when I was last involved in the gold market in 2001, the so-called, or even 2000, the Washington Agreement.
Yeah.
People of a certain vintage will remember the gold price was, believe it or not, getting down to $250 an ounce, and the central banks put a moratorium. They agreed amongst themselves they'd stop selling because they'd been big sellers. Now, of course, that's an age ago, with the global financial crisis, all the geopolitics and everything. The central banks, in general, have been net buyers for a very long time. I wouldn't say they totally dominate that market, but they dominate sentiment because people watch them. So if you see the quarterly figures say that China's bought another 5 or 10 tons, or India or whoever it may be, the market watches that. I think there are three elements that drive the gold price in terms of the players. There's the central banks. There's what I would call frightened money, and this is what we've seen now. We bumbled around at $2,000 an ounce for a while, and then bingo, we're suddenly at 2,400. And then, in a slightly derogatory term, we have the tourists. Now, the tourists are the people who, oh, look, gold's just moved 20%. I better get on board. It feels to me we're at a tourist point here. I'm going to be hung out to dry by saying this, but I wouldn't be surprised if gold actually, at the very least, pauses now and actually starts to just winnow some
Surely
of that profit down.
It's going to be tied up with geopolitical activity.
Absolutely, yeah.
Is that if things look like they'll be calmer in the Middle East, then I think it'll probably dip away, as you so rightly say.
Yeah.
Do you want to talk about copper, Michael?
Oh yes, they go on. Yes, Dr. Copper.
Yes. Yeah. Now, Dr. Copper. This is a very old sort of adage that copper has a PhD in economics. People sharper and wiser than me have pointed out that it's not that good a predictor. It's okay, but don't put your pension on what copper's going to be.
You have in the past, though, haven't you?
Yes.
I mean, are you moving into slightly more esoteric metals now, or are you staying with it?
Yeah, I mean, you again, these are very supply driven. So if you start getting into small metals, expect a hairy ride.
Yeah.
Probably the one that outsiders most get attracted to is silver, because it's a sort of, it's gold on drugs, basically. It's a very volatile market. It's quite thin and it scoots around. But if we come back to copper, in terms of its role, it has been very, very dull, and it's just showing some signs of life. Now, David would say, well, there you go. This is maybe a positive sign that the global economy is picking up a bit, which may be true, but I wouldn't hang my hat on it, but I do think that copper might just start to tick up in the background. So if you're patient and you've got a 6-month view, it may be an interesting one to look at.
He sort of covered Russia. Is there anything else that you would like before we move on to China?
No, just to express, if I may, my disgust, I can't use any other words, that the world at large has been so pathetic at dealing with sanctions with Russia. And as Gerald has said, the ship is holed in every possible
Well, I suppose that the only thing to appease that view is that he's not getting the price that he's having to sell.
No, he's certainly selling at a discount. But there are other fun and games going on. In Britain, the Society of Motor Manufacturers have produced figures showing enormous exports of vehicles from Germany to Kazakhstan, and various other, Uzbekistan and other.
And where are they going?
Yeah, well, it would be very surprising that the 5-fold increase in Mercedes are all staying in Almaty. And so this is, again, you see, this is where large amounts of money are made, and this is what happened in the 1970s with the commodity traders who did bilateral deals with countries that were persona non grata. And to David's point, trying to nail all this down, and they've not, G7 West hasn't been able to do it, and there are big players who don't want it to happen, ergo China.
Let's move on to China then, if we may, please, and tell us what you think. Because again, we've talked about it on these episodes before, and one of the things I think we both agreed is that whatever you see out of there is terribly opaque, isn't it? Really, except that you can see where the weakness is?
Well, again, I think you look at the absolute numbers, and everybody said, well, we've got to be careful with Chinese data, which is probably true. It's clearly massaged, or is very, let's be kinder and say it's carefully curated, the numbers that come out. But maybe the way to look at it is the net change. So if their numbers are declining, they may be slowing that decline. There may be times when they want to put a bit of boosterism in and all the rest of it. But there's a trend towards, I wouldn't say China slowing down dramatically, but it's certainly flatlining a little bit.
Gosh, when you considered 10 years ago when you were getting GDP at double figures.
Yeah, well...
And now it's been 4, 6, 5, 4, now 1.5.
Well, you know this... when you were in the markets and I was in short trousers, David, this is Japan in the late 60s, yes. Early 70s, where, you know, Britain was bumbling along at 2.5% and the Japanese were at 14. And that's when you get that big initial burst, when you get an economy sort of joining free markets. The well-worn story, but you cannot avoid it, is the indebtedness of the property sector in China. If you're looking for a nice explosion, it'll be a name you've never heard of for an unimaginable amount of money, and the Chinese authorities will have to support it. So the bear case is it's the end of the world. The bull case is there's effectively a stop loss that the Chinese government.
Do you think the Chinese authorities, let's go up to the presidential level, do they care about an aging population, do you think? Because, I mean, that's a weakness as well, isn't it?
Well, again, you know, it's a phrase I've heard a lot of sort of political analysts use, that Chairman Xi, every day he gets up and all he thinks about is how do I keep this party going? Not the sort of party you gentlemen would rather go to, but how does the CCP, Chinese Communist Party, actually keep a grip of all of this? And they've got two big problems. The one is unemployment. So if you slow down, what do you do?
People coming from university as well.
Yeah, what do you do with all these people? And the long-term point you make, and this is echoes of Japan again, we're in a situation where demographics, they're going to shrink. And I've been brought up with the idea there's always, you know, 1 billion plus Chinese, it's always going to grow. It's just started to go into reverse. And these are things you can't turn around. That's baked in now for the next 30, 40 years. And it's all to do with, a lot to do with the single child policy of the 1980s, and that sort of, you know, coming to the fore.
Is there any correlation at all? Because you watch these mining stocks, most of which are quoted in the UK, and most of which we know is associated with China. And they've had a very bad 6 months. Generalising, the Anglo-American has bounced because of gold, but the rest of them are hanging in rags, really, basically. Do we take that as a barometer, Gerald, that if those share prices go, that means that China is really driving their economy again?
I would rather look at a couple of other players. Look at the Australian miners and look at the coal and iron ore markets. Right. If they start to go into reverse, then China, which is basically the major buyer, you dig a hole in Australia and you ship it to China, and that's been the case for 20 or 30 years. If you want to try and finesse that, you can maybe watch the Australian markets and watch the Australian miners, but not something most people want to trade, and you'd have to be brave to do it. But keep an eye on iron ore and the coal price, because that's a good sort of litmus test.
Can I bring him onto the City of London?
Do, please.
We have talked in the past, David and I, and you and I, all three of us have talked in the past about the lack of IPOs, or the seeming lack of IPOs in London. Do you think, as a man who looks at the business of risk, do you think there's a danger of London becoming a graveyard of safety, if I can put it?
I think that's a fantastic phrase, and I'm rather alarmed to say I think I agree with you. The nanny state has maybe started to encroach a little bit on things. It's certainly not the freebooting market that the participants like to think it is. No. And it's at both ends that bother me. It's at the bottom end, the AIM market is looking very, very weak in terms of new players coming in. And I think a serious shot across the bows was the chairman or chief exec of Shell, was it last week, saying, we're starting to wonder about listing in London. And that would be absolutely catastrophic move. One of the problems, actually may be the way the finances of the exchange were. The exchange is a very small part of their overall business. They're essentially a data business with an exchange bolted on the
Absolutely.
side.
I mean, Refinitiv rules okay.
Yeah, and so that's a perfectly good business, but I think it's sort of overshadowing the exchange. And I don't see any of the more maverick characters, again, that David and I can remember, and indeed yourself, Michael, will have interviewed, the sort of entrepreneurial get-up-and-go types.
The animal spirits.
Yeah, to start new broking firms. You know, where's the new ICAP in this world? Where's the next Winterflood Securities? They're not there. All these city firms are busy actually amalgamating to cut costs because they're potentially in a shrinking market. What do you do about this? Well, that's easier said than done. I think regulation's got to be looked at.
I was going to say, there we are, 6 years ago, we've got Brexit, absolute shambles. What was the easiest goal from this penalty spot was financial services.
Yeah.
And what have the government done? Zippo.
Well, because bureaucrats never put themselves out of business, Dave.
Now and again, Gerald, the time has come, bureaucrats are going to have to do as they are told.
Well, this is
happening.
This is a wider issue. I think there are two things. The root and branches may be too strong, but then we've got to finesse this idea that we get rid of cluttering regulation, but that London is still seen as a gold standard place to do business.
Absolutely.
Yeah.
And also, they need to get rid of stamp duty. You know,
Exactly what I was going to say.
half a percent. I mean,
why would you come to London to trade your stuff when you don't have to get that elsewhere?
And also, and this is crimping the ability for people to raise more capital. And as I say, you get startups who then, when they really get going, one thinks of ARM is the poster boy example, go off to New York. But now we've got the absolute, gigantic outfits like Shell saying, well, do we need to be here? So we're not going to solve it round this table. More worryingly, we're just down the road from Parliament and legislation. I don't see any appetite for them to do anything. I think it's a bit depressing.
It's very depressing. I mean, there's no question of any doubt about it, that having had a very fruitful relationship with Aquis Exchange, which deals with small companies and is trying to bring in the retail investor in to give it more liquidity and the rest of it, they are absolutely convinced that the day of the multi-billion-pound IPO coming to London is gone.
Yeah.
We have fantastic SMEs, small businesses, which the government seems to put on its blind hand buff hat on, which needs stimulation to encourage investors to come in. And this is where we're going to make our money. And they will be sold to the big tech companies and other things for add-on value.
Yeah, and what I'm fearful of is that the sort of civil service attitude is we can ring fence a lump of money and we can pick the winners.
No,
again, history is littered with fiascos along this line. The idea that a committee in Whitehall is going to spot the next greatest thing and promote it, I think is for the birds, to be honest.
My final sort of thing, and you probably got more, but I'd just be interested to know what wild cards are you holding up your sleeve? I'm talking about the likes of Argentina, possibly Japan, possibly. Talk a little bit about that. What's your what's the wild card?
You've been looking up my sleeve, obviously, Michael, or mixing metaphors. You've shot my fox, whichever you like. Argentina, I think, is fascinating.
Politically stable enough?
Well, that's the issue, you see. At what stage would risk capital get involved? And I rather think the more buccaneering maverick types in London in the 1980s would start an Argentina fund. And actually, so Joe Public could invest in new ventures into Argentina. It's fraught with risk because Javier Milei, who's the president, he is not the all-powerful figure that he.
He's got a bit of opposition there.
Well, he's got to get it. He's got to get lots of things through Congress, who are absolutely dead nuts against it. But some of his initial moves have been extremely good. If we're looking for a happy story with a good ending, look at Poland when the wall came down in 89, 90. 90 and 91 was grim for Poland. I mean, huge unemployment, collapsing prices, no capital, all the rest of it.
Lots of people leaving Poland
Absolutely.
to the UK and other countries,
they got over it. Even by the mid to late 90s, they were starting to, be in good shape. Yeah. Now they're an incredibly strong economy. They've also got enough money to be the strongest defence force in Western Europe at the moment, although that may be a fairly low bar.
Tusk is a good bloke, isn't he, probably?
Yes, I think he is. I think he's the sort of guy that appeals to me because he's a slightly maverick figure.
Yeah.
He will very much upset the sort of consensus establishment, which is, very embedded in the whole Peronist Argentine thing. And then just to kind of finish off about Argentina, if we had been doing this interview 120 years ago, don't know if it was even steam radio then, one of the buzz phrases was to be as rich as an Argentine. Argentina was one of the richest economies in the world.
How well the UK did out of Argentina?
Very much so, very much so. So that's one wild card. The other one, which I think I'd call more of a crowded trade, which is Japan. Right. Now, you've got two things on the go in Japan. They seem to be doing all the right things in terms of the stock market has got going. I never like people say, we've got back to the all-time high from 40 years ago. Well, that index is just not the same index as it was then. And
different companies, different
absolutely, everything's very different. You're really careful about how you treat that. But nevertheless, there's much more interest in Japanese equities. The crowded trade is people in the foreign exchange market screaming at some stage that the Bank of Japan will have to intervene because of the weak yen. I have a personal interest here because I want to go on holiday to Japan, so it might be quite a good time to go with the weak yen. But the lessons of central bank intervention, it starts with jawboning and then they make an effort. And we've been here before with Japan in the 1980s where they intervened all the time. They spent an absolute fortune to very little effect. If the market's turning anyhow, as a central bank, you can give it a nudge. But if you're going to put a line in the sand, you will not go any further. It won't work.
Two observations on Japan. One, what I call the incestuous behavior amongst the various companies owning their other shares is going. It's not completely gone, but it's going. And the regulation is much tougher than it was.
Yeah.
And rather this under the table, don't talk about it.
No, there were all these sort of back channels and links between companies. That's all. I agree with you. That's loosened up a lot.
I think that's quite keen.
Well, it's important for them they clearly need outside capital. And
the other thing is Bank of Japan is going to be, I think, more of a international operation that's going to intervene rather than just back off and do nothing.
I think so. They tended to be a little bit isolationist in their policy. Yeah. Mind you, they were in the most titanic jam. And coming back to China, if things go wrong in China, this is Japan Mark II. Demographics going wrong, property losses, and the government lose control of the economy. I don't think that will be happening, but if you're looking for disaster scenario, that would be that. Come back to the Bank of Japan. To intervene successfully, again, we're back to how you do sanctions and embargoes. You've got to do it all of a piece with the other central banks. I'm not certain the Americans are very bothered about a strong dollar. I think they probably quite like it. So I'm not certain. If you're going to try and make a lot of money out of an intervention trade, you're going to have to be very, very lucky with your timing.
I think that's right. Before we close, I have to go and end this on a very controversial note. You love controversies, so do I, and this one does as well. I thought it was very brave of the authorities to ask Ben Bernanke to appraise the performance of the Bank of England and, more to the point, the Monetary Policy Committee over the last 10 or 20 years. Your thoughts?
I think the use of the word brave is very interesting. I would prefer predictable.
Okay.
I tell you why, because they're marking their own homework. And I think Bernanke's a very distinguished guy. He's from a very strong academic background as well. But haven't we got an international version of groupthink here? Because what he's done is he's come in and he said, look, I've looked through the stuff you've done, and you could run this model better that way, you could do that. And I think that's part of what's wrong. We can all play with models, and crikey, in Britain and many countries, we suffered from models. One thinks of the mistakes over COVID predictions and all the rest of it. A way around that, which I don't think was addressed, is if Bernanke had got other people in from a non-financial background. You've got to have a financial expert, but I would like to have seen somebody from the aerospace industry to say, well, how do you predict what is a very complex system? You imagine a radio with 500 dials, and you turn one dial and every other one slightly moves, and you lose the channel. It's incredibly difficult to predict an economy and to also stand outside it. And I think if there'd been input from external people, I think of the Challenger accident and Richard Feynman, the physicist. It took a physicist rather than a rocket scientist or guys who'd been on the project to say, hang on, there's something wrong with the famous O-rings. I think it would have been quite nice to have had a fierce statistician. One thinks of somebody distinguished like Sir David Spiegelhalter, who's the king of risk at Cambridge, to just give it it just felt all too much central bankers marking one another's homework. 2 points
before we close. I'm not trying to hurry, it's just we are on a time-sensitive thing. Is, do you approve and do you like forward guidance?
No, I think it actually can be a bit misleading. I think I have a slightly extreme view, is that I think central banks give out too much information too often. I mean, there's a part of me that would quite like the idea they only met quarterly for the monetary policy thing. Because
you wouldn't have all this going on.
Yeah,
time,
and
would you? Yeah.
Nobody in their right minds is really going to make a decision on one set of monthly data. You need a longer time frame. But it is the nature of the world and life in general that we want more and more immediacy in everything. And so we make more and more immediately wrong decisions.
Which, just sort of finally, and it's been
I've
great.
got one more finally.
All right, go on. It's great to talk to you. I read every day market report, risk on, risk off, and all this kind of stuff and so on. Right, yeah, correct. However, it is worth pointing out, is it not, that if you don't risk, then you go along with the herd, basically. My question to you is simple, really. What do people think about risk right now?
I think it's always a very personal thing based on your past experiences. I talked about markets and tourists. You get a lot of people who get in at the top. There'll be loads of people who bought gold, retail buyers over the last week. The more brave ones will have piled into silver. I think the hardest thing in trading markets and looking at risk is to keep your personal emotions under control and also to watch what other people are doing. And so if they're very excited, enthusiastic, dial back a bit. If they're slashing their wrists, try to be brave to get involved. We've discussed today, are we in the excitement zone or the slashing of wrists? Well, like all these things, that depends on your own view. I'm moderately bullish for equities, but it is dependent on growth. But as David has said, an event, it could even happen before we finish this interview, a big geopolitical event, and then everything's off.
I was interested when I spoke to Andy Haldane about 4 weeks ago. He was adamant that without risk, there will be no growth in the UK.
I think that's exactly right.
I think he's right. And the last question, and it's a slightly supercilious one, AI, could it play a role in the central bank thinking and...
Well, now look, I'm not necessarily a believer in AI, so again I'm going to be down the wrong end of the equation. It's machine learning. And what machine learning does is it takes past data, it slices and dices it and crunches it and regurgitates and comes out with new insights. Perfect for things like medical diagnosis, where it's been proven that much better than doctors sort of eyeballing X-rays and scans and all the rest of it. You're taking an incredibly complex machine, which is the economy or the economies and then the global economy. Endless inputs. The idea that there's going to be a magic brain that's going to sort all that out, I think is wrong. And it's wrong philosophically. Just imagine, to finish off, that you're like you're a pair of James Bond villains and you've got the perfect trading system. So you know when to buy at the bottom and sell at the top. You spend all your time on your yachts off Cannes or something like that, stroking the white cat. That will fail. Even your magic system will fail, because you cannot be outside of the market. The market will think, hang on, Messrs. Wilson and Buik are doing so-and-so, we better watch it, or we better stay away from it because they're manipulating the market. So the idea that, and the financial markets are much simpler than the economy, that you're going to find a way to easily tease these things out from essentially testing a back data, I think. Good luck.
For the birds.
Gerald, it's always a pleasure, I think.
Absolutely. Stunning.
Thank you.
Thank you.
Thank you so much
enjoyable.
indeed. End of this edition of Talking Markets. Thanks once again to Gerald Ashley. I hope we'll see you soon.